Good afternoon, traders. This is Tony from Easy Markets in the Sydney Dealing Room. We have an update on the Aussie dollar for you. So, very big change in the rhetoric coming out from the RBA, not just the hike, but what they're worried about, what they're concerned about. Just had to read through the low statement that came out with the rate hike yesterday and how the inflation number from Q1, surprising to the top side, was the big change that made them move quickly. They're worried about getting inflation back in line. They want to get it in line by 2024. So in between that 2 and 3% level, they expect this year the average interest rate, inflation rate, to be about 6%. And they note, obviously, that the the unemployment at 4% is nothing to be worried about. Okay, so it's no longer going to be part of their day-to-day sort of consideration anymore, the unemployment, because it's already reached pretty much max employment. The inflation number and the wage inflation is what they're going to be watching. They're going to see if this 1 year of high inflation turns into 2 years of inflation via the push inflation. Now, what's push inflation? It's where you get the wages increasing to pay for the increase in prices of the goods, and then the increase in wages get companies to increase the price of goods again, and it's a bit of a circle. And that circle, if it can get a little bit ingrained in the mentality of the market, means that the central bank ends up having to go higher than expected. Now, a big part of the reason why I expect the Aussie dollar to rally in the coming weeks is because the bond market has been given the green light, right, to start pricing in rate hikes, aggressive rate hikes. It's basically, the RBA will keep raising rates until inflation falls, right? Like it's going to be the game. So the market pricing in 6 rate hikes, that's fine. 7 rate hikes, that's fine. 8 rate hikes. It doesn't really stop until the RBA says, "Hey, settle down, guys." Right? Like, this is well above what we expect, and when they want to stop it, they will with the right comments, right? But in the meantime, what can happen is something very similar to what happened in the US, where you get again and again the market pricing in more and more rates, and the resultant move on the currency is generally up. So I do like the Aussie dollar to rally on that story. The question that I think everyone has in their mind is not so much the Aussie dollar, because Aussie dollar, you can understand, commodity currency in this sort of uh, market is going to do well if stocks are fine. Okay, so we can get stability in stocks, and we can get, say, something which gives the US dollar a breather. The way to play against the US dollar is going to be the strongest pair. Right. So, the Aussie dollar is going to be one of the safer ways of playing against it, say, even tonight at the FOMC. The FOMC, I suspect we're going to have a very big rate hike, like a 0.75. The market's been buying US dollar for the last 2 weeks ahead of this number, this rate hike tonight. And point 0.5 is definitely, like everyone thinks, point 0.5, with the 0.75 being the shock. Okay. Now, the 0.75, assuming it doesn't happen, then there's lots of ways in which the market will be a little bit disappointed. The dollar buyers will be disappointed, and it can spark a little bit of a short squeeze. So that'll be euro higher, Aussie higher, dollar yen higher. I mean, it's very unlikely just to stay here, right? So if we're not going down because they didn't raise by 0.75, that's the reason why we're talking topside. That'd be dollar yen back to, say, 128, euro to 107, Aussie to 73. That sort of squeeze is natural and not against even the downtrend. Bang, 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 up, 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 bang, 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 up, up, up. Like, this level here is just the midway point if this level holds, right? So range trading for the Australian dollar is very normal as well. So we win here if we can hold the bottom, because we're either in range trading, downtrend, or uptrend, right? So two out of the three options at this level are going to be great for us. And like I said, if they don't break the 70 cents tonight and the market starts a relief rally, you're going to have to wait for the next rally to fail, and then we can try again if the whole US dollar rally is still on the cards. How will we know that the US dollar rally is still in the cards? I think the best way at the moment is to use the 10-year as a proxy. So the 10-year US interest rates, pretty much setting out long-term interest rates in America, which does sort of have this impact over time. Um, but we're coming up to this big level on the 10 years, and that's 3.0%. We tested it a couple of days ago. Um, if we see US dollar strength tonight, that number is going to go higher. Okay, it'll be like 3.1%. Market uh, surprised by the Fed with the more hawkish dot plots raised by zero point 0.5. There is ways it happens, even if they raise by zero point 0.5. They have to basically have some crazy stuff in the statement there, indicating that they're willing to raise more quickly at the next meeting, and that will have the same effect, pretty much as raising 0.75 this meeting, just a little bit smaller. All right, so as in slower. Okay, it might take a little bit of time for the narrative to develop. Hey, wait a second, what did that comment say? And then the market runs with it. All right, now the other way the market can move very aggressively is in the Q&A with Powell after they raise rates, if he says the wrong thing. But these risks, about the US dollar getting stronger and stronger and stronger, the risk reward on trying for that is skewed much more towards US dollar weakness, um, given that we've rallied into the event. So we call this buying the rumor, selling the fact. In this case, that means buying US dollar, then selling it afterwards, and that's another way that this trade can go well. So although dollar, yen, and pound and euro might move more today, you can sleep a little bit easier when you are trading the Aussie. You don't have to worry too much. I suspect that we are going to crash further without you having an opportunity to watch tonight or get up in the morning anyway. It comes out around 4 a.m. Sydney time, and then 4:30, I believe, is the press conference. Let me just double check that for you. Yeah, 4:30 is the press conference. So this is right at the end of the US trading session tomorrow. Uh, if it does what we expect, if it is a relief rally, then you are going to see the stock market high as well. Perhaps if you are watching and you're not sure exactly if there is something exciting, check the stock market. Basically, you want to see stock market up. That means they've said something that's taken by the market as dovish. And that's going to allow the US dollar to give back some of the gains because it's a safe haven. All right, guys. So I hope you understand that rally from 73. We do expect a bit of stalling here. Perhaps we can get up there if the say the war ends, and so we're talking about months here. If the war ends or the bubble in the Australian bond market, um, interest rate market there begins to grow. Okay, so they start piling into the one-way bet that they're raising rates and overshoot, and that's another way we can get to 75. All right, guys, best of luck with your trading tonight. We will have an update tomorrow on the Fed and what they do come out with and what you'll be watching. But if those who are looking to trade tonight and looking for a pair of strength to play against the US dollar, then you are looking, Aussie dollar is a nice one. Looking for the best pair to play against the US dollar if they do something crazy and continue to buy, continue to suggest that interest rates will go up aggressively and don't push back against the market at all, or they just raise by 0.75, then dollar yen. Dollar yen should be very clean on the top side. It moves very quickly with the interest rate moves. So, but it is the least likely option, right? So keep that in the back of your mind of, oh, okay, they're going crazy. What do I do? Um, you don't buy Aussie because it would have broken. You buy something that is you don't have to be just right about the US dollar. You can be right about the other pair. So something like selling euro makes sense too. Okay, while the wall's still on. All right, guys. Best of luck. We'll update with the Fed again tomorrow.